I guess the key question, what happens next and perhaps beyond?
Well, I do think the Fed will raise rates next week. If I were at the FOMC, I would do that also. And while inflation is improved and the economy is very much a mixed bag, manufacturing's weak, anything interest sensitive is weak. The service sector is very resilient. And I think the concern is that the service sector inflation there is going to be sticky for some period of time. And that's the rationale, I think, for this next rate increase.
Sure, I just have to ask you about the data out today, because the retail sales report, when you look beneath the hood, shows a very resilient consumer, still plenty of consumer spending. At the same time, contrast that with industrial production, down again 0.5%, manufacturing, that the biggest part of industrial output, down for the second month in a row. What does that tell us about the economy and the Fed's debate next week?
It tells you that in some sectors of the economy, it feels like they're in a recession. But I think the service sector has remained very resilient. I think part of the reason it has is the unspent ARPA money being spent by state and local governments already ran through the 2021 federal budget, so you don't see it there. Inflation Reduction Act projects being announced all over the country, Infrastructure Act projects, and I think those projects are the X factor that is stabilizing and making sure that the service sector around the country is still strong. And I think that's what's going on. And
offsetting the rate hikes to date, so even though the restrictive, we would be restricted, but Shery asked, and after this meeting, so what is going to happen next? Are we going to get a signal from Jay Powell of potentially more rate hikes, keeping the door open? Is he going to signal we're watching the data, but maybe this is enough?
I'd be shocked if he doesn't keep the door open. If I were at the FOMC, though, I would go along with a rate increase, but I would also strongly advocate that they do more work on the pipeline for, again, remaining ARPA money at the state and local level, which I think could be sizable based on the data I've looked at. Inflation Reduction Act, what's been announced and what's going to be announced, same with the Infrastructure Act, because I think we could be in a situation, even though they raise rates again, I think the service sector is going to be a little bit sticky, and I'd want to have a very firm understanding on the forward calendar of these fiscal actions that may be to some extent blunting some of our monetary policy tightening.
Well, but in previous cycles, we've had the countercyclical impact of Chinese growth, and we clearly don't have that now. How much of that is a wild card for US and global growth? Do you see that exporter deflation risk at all?
There's no question that with China GDP being slow and their inflation being relatively tame, that tends to create more disinflation and slower growth in the United States, all things being equal, and I think it's a factor to consider.
Well, Rob, it's pretty clear that your thesis is that the Fed has sort of missed how they should gauge all this spending, this fiscal spending, seeing it more at the federal level and not how it's playing out in the local regions.
So I don't disagree with the punchline, which is they're going to raise rates in this meeting. I think the part I'm encouraging, if I were there, would be respectfully to say, let's make sure we know why we're raising rates from here. I think the thesis they've had is we haven't been restrictive enough for long enough. I actually think without the government spending programs, I think we would have already been able to stop raising rates. I think the economy would be much softer than it is now. And so my concern is, I agree with the ultimate actions, but we're getting down to the last couple of three moves, and I'd want to make sure we understand the pipeline of these government fiscal programs to make sure we know when we should stop and have a little bit better grip on that.